Welcome to the Explainer. Okay, today we're looking at a brand new data set from the IMF. It's projecting the wealth of literally 218 countries for the year 2026. And look, staring at a massive spreadsheet filled with hundreds of trillions of dollars, yeah, it can be incredibly overwhelming. But don't sweat it, because that is exactly why we're here. We are going to take all that dense data and transform it into a highly structured step-by-step guide. So by the end of this Explainer, you'll be able to effortlessly decode these massive global wealth projections and really understand exactly where the world's economy is heading. Let's get into it.
We're going to use what we call an analytical ladder to tackle this without overloading our brains. We've got Step 1, the wealth metric. Step 2, the economic giants. Step 3, tracking the growth. Step 4, wealth per person. And to wrap it all up, Step 5, the global pie.
What's truly powerful about this ladder is that it gives us a permanent framework. Seriously, once you grasp how to define the metric, measure the giants, track the speed, zoom in on the individual, and then analyze the global distribution, well, you can use this exact method to contextualize literally any future global economic news you ever come across. It's totally foolproof.
Okay, let's dive into this with Step 1, the wealth metric.
Now, before we even look at a single country or crunch a single number, we absolutely have to set our foundation. The metric we're tracking today is nominal gross domestic product, or GDP for short. Honestly, the easiest way to think about nominal GDP is to imagine a giant national cash register. Every single time a good or service is produced and sold within a country over a 12-month period, that cash register rings. And nominal just means we're looking at current prices and exchange rates, right? We aren't adjusting for inflation or cost of living differences. It's just the absolute raw total of a nation's economic output.
But here is the crucial point. And honestly, understanding the difference between these next two concepts is the secret key to unlocking the true narrative of all this IMF data. We're comparing total GDP, which is the overall monetary size of a nation's entire economy, with GDP per capita, which is that total output divided evenly among the country's population. It's a huge difference. A massive total GDP doesn't automatically mean high wealth for the average person walking down the street. Keep this distinction in mind, guys. It seriously changes everything we're about to look at.
Moving right up the ladder, we have Step 2, the economic giants.
So, with our foundation set, let's zoom out to the macro level and see who actually holds the most wealth globally. And this brilliantly illustrates the staggering reality of global economics. By 2026, the United States is projected to have a total GDP of $32.38 trillion. Following in second place is China at $20.85 trillion. But look at the undeniable drop-off after that. Germany sits way back in third place at $5.45 trillion. We are talking about a literal multi-trillion-dollar gap between the top two economic heavyweights and the rest of the world. It is an unbelievable concentration of sheer economic size.
But size isn't everything, right? Let's pivot to Step 3, tracking the growth. See, we also have to look at velocity, 16.17%. That is the projected GDP growth rate for Guyana in 2026. This is such a fascinating microstory hidden right in the middle of this dataset. While the total size of Guyana's economy is relatively small, it's projected at just under $34 billion, its velocity is off the charts. Double-digit growth like this, it's a shocking picture of rapid economic expansion happening right before our eyes.
Now contrast Guyana's incredible velocity with this number, 0.79%. That's Germany's projected growth rate. Remember, Germany is our third-place economic giant, ringing up over $5 trillion in its national cash register. But being an economic heavyweight absolutely does not mean you're moving quickly. A sluggish projection like this is a great reminder that massive economies, well, they often behave way more like giant cargo ships than nimble little speedboats.
Let's move to and see how this builds in Step 4, wealth per person.
We're zooming right down to the micro level now. And you'll immediately see this incredible economic tension when we bring population back into the equation. In 2026, India is projected to be the sixth largest economy worldwide, with a total GDP of $4.15 trillion. That is massive macro-level wealth, no doubt about it. But when you take that $4.15 trillion and divide it by India's enormous population, the GDP per capita plummets to just $2,813. So India's national cash register is constantly ringing, right? But because of its sheer demographic reality, the actual national wealth per person tells a completely different story.
Now, what's really interesting about this slide is the extreme opposite end of the spectrum.
Take Monaco with a staggering projected GDP per capita of $256,581. Now, Monaco's total GDP is relatively tiny compared to India's. We're talking only around $10 billion. But because its population is so small, the wealth per person is just astronomical. It perfectly illustrates exactly why looking only at total GDP gives you a totally incomplete picture of a country's real, on-the-ground economic reality.
Finally, we've reached step 5, the global pie.
We're going to zoom all the way back out now to see exactly how this immense wealth is divided up across the entire planet. When we look at the whole global economic pie, the sheer scale of concentration is just, wow, it's undeniable. The United States holds 26.23% of the world's GDP, and China holds 16.85%. Think about that for a second. Out of the 218 countries tracked, just 2 of them consume well over 40% of the entire global economic pie. Germany and Japan follow with just over 4% and 3%. It's wild to think that nearly half of all the wealth produced on Earth is concentrated in just a handful of nations.
And that brings us to our ultimate question. We've seen that global wealth is expanding, right? Trillions of dollars are being generated. But as this global pie grows into 2026 and beyond, will the slice per person grow right along with it? Or is the gap between macro-level total wealth and individual, everyday reality just going to continue to widen? I want to challenge you to take this step-by-step framework into the real world. Next time you see a headline about global economics, pull out this ladder. Ask yourself about the metric, the absolute size, the velocity, and most importantly, the reality for the people on the ground. Thanks so much for joining me on this explainer, and as always, keep questioning the data.